What happens when global conflict erupts, but Wall Street shrugs it off? The fast money, traders break down the market's surprising moves and what could really shake things up next. Watch until the end to hear the traders' candid takes on what could actually trigger a market shakeup, why oil prices are the key to watch, and how the Fed's stance on interest rates is shaping everything.
But in terms of crude oil being down 6%, absolutely not. The S&P rallying the way it did, no, given what we heard on Friday into Saturday or into Sunday, no. So that's why it becomes such a difficult game to play. And what aren't we talking about? To me, listen, loss of life is a horrible thing. I think we're all very respectful of that. But the market-moving event, in my opinion, is closing the Straits. And if that were to happen, then we'll have a conversation about where does crude go, where does the S&P go. But short of that, in terms of the market, it's sort of business as usual.
Yeah. Julie Beal, your thoughts? Because most market strategists do say unless oil jumps, unless there is some sort of event that really causes a jump in Brent, a jump in WTI, et cetera, it hurts the pocketbooks of everyday Americans. We're not going to see a market impact.
Yeah, I think that's probably right. I think everyone is very, very focused on where oil is moving because it's been such a good guy for inflation. It's been so helpful in order for us to kind of move forward to a regime where we can lower interest rates. And I think if that is taken off the table, that really jeopardizes both what the path for the Fed is, but it also, I think, is going to really take a bite out of consumer confidence. And that's what really a lot of our economy is hinging on right now. What I think is interesting is just it really feels like in this market is like, oh, okay, this wasn't as bad as we were all worried about. We can manage through this level of uncertainty. It's fine. And I agree. I think we still haven't really cleared through enough to know how exactly it's going to impact us over the longer term.
We are so close to getting that cut, right? I mean, we heard Bowman today, following up on Waller on Friday.
I think we learned today, and we didn't learn it. We were reminded today that the Fed is so much more important than any other factor out there, and that this is a Fed that I think after Powell, one of the observations was this is a Fed that seems to be okay with PCE at 3.1%, and that said actually until the labor market falls apart, we're kind of comfortable here. But even without the labor market falling apart, you've had two important voices, including Vice Chair today, Bowman, basically saying she saw July could be a possibility. Markets are looking through war right now. They are looking at the Fed. And if you look at some of the performance of the market today, you even had small caps outperforming. You had some equal weighted stuff outperforming. It wasn't just runaway for the tech growth trade. It really was stuff that would benefit from the Fed stepping in and finally moving, which may or may not happen. But that's the more important headline out of today.
Yeah, I go back 6 months, right? So we've had really two bouts of major volatility in the stock market. That was December 18th after the Fed, I guess Fed Chair Powell came out a bit more hawkish than some folks felt going into 2025. And that was actually a really interesting day, if you think about it, because I don't think that caught anybody by a huge surprise. It just pushed out rate cuts, maybe 6 to 9 months or something like that. So here we are now. Nothing that the Fed said really moves the stock market. Just think about that over the last few months or so. And obviously, Fed Chair Powell speaks tomorrow. Last week, he was concerned about a lot of the things we're talking about, the uncertainty around geopolitical, the uncertainty about inflation. And you look at a day like today and you say to yourself, there's no concern. I mean, there's absolutely no concern. People are looking past geopolitics. They're looking past inflation. They're looking past a trade war. And that was the other bout of technology or about volatility, I was going to say, just 2 months ago.
But I'm not clear. Are you saying that you think that the Fed's influence now on the market in terms of being a catalyst is not significant?
I think it's less significant. And I think, to your point, once you start having this chorus of folks suggesting that rate cuts are going to come sooner than a lot of folks think, and then maybe there's more of them this year. I mean, I think it's amazing. We go back to September last year. They started with a 50 basis point cut because they were worried about the jobs market. Then they followed up with 2 more. Now, if you're telling me if PCE comes in cooler, if some of the stuff in and around geopolitics kind of settles down a little bit and inflation and growth and all this stuff, maybe they're too low on growth, too. I mean, the way they kind of locked it lower last week. So, again, I can see why folks are starting to think about cuts sooner than some might expect.
In terms of yields, and again, I get it, they're lower today. It makes sense. I'm still probably one of the few people out there that can think yields can go higher by the end of the year. When I say higher, I think we can approach 5%. And I don't think it's going to be because growth is so robust. I think it's all the concerns we've had that, by the way, the market doesn't seem to care about at all. But if you do get a hiccup in the bond market, whether it's over the next couple months or early next year, I mean, at some point the market absolutely has to match.